a week later, we're back, right? We're back and we're with Pasquale again due to high demand. Everybody going crazy seeing your gold shorts from last week when you were running, 250K in profit, floating. And yeah, Pasquale, I mean, where are those trades right now? Show the people again live what is going on with your trades.
Yeah, so after a quick setback, like we ran it down as expected, and right now we are at 1.2 million. I added a few positions below that, below the breaks that we can go through, but right now it's knocking on the 200 daily moving average, and it's a Friday, so I'd like to call it a day and focus on some bigger things.
Yeah.
So I think I would go on and close it out because it's a nice trade in the end.
Okay.
So should we do it?
Well, do you want to share your screen first so we can show the people what's actually happening?
Of course, of course.
And also, just to clarify, did you just say 1.2 million floating profit?
Yes, you can see it here on the bottom. It's
What?
1.25. Yes.
Oh my God.
So this is the
And again, we can see this is on IC Markets live,
yeah,
regulated broker, right?
yeah. Only trade on regulated brokers. So what we talked about is this big red line, the 200-day moving average daily. That's a pretty big, I think, support for the time being right now.
Yeah.
Of course, it can shoot down any day, but we trade possibilities here, and it's a Friday afternoon. Markets will close down. Everything can happen on a weekend. It needs, especially this day was from 1958 to 1938 now, so a big move on the day as well, and it needs real conviction to break through these levels. So I rather call it a day.
Yeah. Okay.
And take it off.
So let's close those trades before we really dive into this whole setup.
All right. So we're in 1.2. Let's. All right. Here it is.
Oh my God. That's what do I even say? Oh my God. It's just, yeah, this is crazy. This is crazy. I mean, you really started with 30,000 euros, right?
That's correct.
And now you have banked 1.252 million fucking euros.
That's correct. That's a nice risk reward, right?
Wow. I mean, we need to check what is the percentage gain on this. Like maybe you need to connect this to my FX book or TradeZella or something. I don't know, right? Just to see that's
pretty spot on a 40x, right? So 40x.
Pretty. Oh my God. Oh my God.
So 4,000%. But it was a good setup. I think I planned it for almost 2 weeks before I wrote it down on my Outlook channel. We can go through that. All my thought process behind it. I pointed out for weeks that this is a trade that I want to look at, and turns out to be a good trade.
Yeah. So everything was actually forecasted beforehand before you even taking this trade from the beginning.
Yeah, like 2 weeks before.
Oh, crazy. Okay, so you actually had this set up in your mind 2 weeks prior to you actually placing the trade.
Actually, I had it in mind, not the numbers, but the actual setup that it would come. I had in mind like below there on beginning of October.
Okay.
Like this is the jump up of the Israel-Palestine situation, and it mostly turns out the same way. So this is a blueprint that I posted also, and we can go through that.
Yeah.
So this is a high possibility setup. That's
Okay.
why I went to IC markets to get this positional trade in.
What's your leverage on this account, by the way?
1 to 500.
Yeah, yeah. A lot of people watching this will be sad that they firstly can't get access to IC markets because they're based in the US, right? Or some other places too. And they can't even get 1 to 100 leverage, I think. Like that's really hard for them to get in certain places now, you know?
Yeah. So since we are in Europe, or I'm in Europe, we can access that as well. But with the IC markets global in Seychelles, we can.
Yeah.
That's the workaround.
Yeah, I've got the same account, so I've got leverage as well, 1 to 500 on IC
Yeah.
market. Yeah,
And
maybe
I
it's
got this
time.
account like for 10 years now. This is my actual personal account for a long, long time.
Oh shit. Oh shit. Okay. So you probably got a lot of history on that account anyway, but yeah.
Yep.
Crazy. Yeah. I think I've been advising markets for probably about 4 years, maybe. Yeah.
Yeah,
When I
I
started,
like it.
first broker I used. So yeah, no, it was good. But before we do dive into the whole thinking behind the setup and then actually, planning, executing, and then even exiting this trade, right? All of that. One thing I wanted to recap, right? So, okay, we had part one last week where you did 30K to 250K, right? But
Yes.
prior, so actually, no, not even prior, but I just remember last week that on Friday, something happened, right? So on Friday, do you want to just quickly walk through what happened before we dive into the whole setup and everything else?
Absolutely. So my positions from early last week were over there. I opened it on 2006, 2003 over there. So this double top was my entry, my first entry. And around that we around that area we recorded, right? And on Friday NFP came out, and if you remember, I hoped for a good NFP number.
Yep, yep.
So yeah, and it turned out to came in very, very bad, and that's why market shot up. I closed all my trades on break even. Above that, even lower, I closed it with $9,000 minus, I think. So I started again with 21,000, and but almost a break even. No, we don't count the 9,000 minus, right?
I mean, let's just rewind there quickly. Okay. I actually didn't even know that. So let's just rewind there. So last week, Friday, it actually went back to your entry and more. So you were actually in drawdown
Yeah,
and you,
because it shot up so
yeah,
quickly, right?
yeah, yeah,
And
yeah.
I wanted to close it at break even, and it shot up through my like slippage. It slipped to my stops, and I got closed a bit lower.
It
Um,
happens. It happens to the best of us, right? But
it's
one
expected.
thing I wanted to clarify there, right? Sorry. So one thing I wanted to clarify there is that okay, last week when we recorded, you were running 150K profit plus and actually 250K on the same day that you mentioned, right? Then on Friday, all that floating profit had gone, and you actually made a 9K loss, right?
That's correct.
So at that moment in time when that happened, so you made a 9K loss, so your account was at 21,000, right?
Right.
Okay. How are you feeling at that moment in time?
I was pretty mad because it shot through my stops, so I got slipped. But other than that, it's expected to if you hold a trade through NFP, right? So I wasn't really mad. Of course, I was mad because I was up, but it was the setup is still the same because it shot up to my entries above 2K, and the whole structure that I want to do is still completely the same. So I just re-entered in the end. That's why I wanted to get stopped out on break even.
Yeah, yeah. Okay. So let's clarify one thing there, right? You were feeling mad. So emotions wise, you were still feeling what you were supposed to feel, right? Like you didn't disregard anything. You're not saying like, oh no, I didn't care. You're being totally transparent or honest that you were mad at that time. because of course you had your setup in place. You in your mind, you already knew what price is going to do later. It's just about when is it going to do it, right? So when is it going to actually go ahead with what you had planned initially, right? So that's one thing. So you were mad, but then you re-entered, right? Okay, now walk me through when you re-entered that trade. So you're 9K down, the account size is 21K now. Talk about your entries at the top and how you were feeling at that moment as well.
So I re-entered very much at the top, right at the top of the NFP candle on Friday. When it shot up, I tried to enter on any price above 2K. That was my goal, because that's the setup, and pretty tough resistance above,
Yeah.
and doesn't really change on a good NFP number. And it shot up like almost $20 on the NFP. That's enough. And so I tried to get in on any price there, and I got in at around 2003, I think, 2004, like pretty much at the top, and it instantly went into profit. So I was quite okay for a Friday, and I got back to, I think, over 100K in floating profits. So on the first like retests into late Friday, I added to the position on 1994, around that candle. So it was late Friday. The move was in, and it also got retraced completely. So that was the confirmation for me. Oh, setup still works. NFP is a no game changer here, and I want to just re-enter my trades on any pullback, and that I did. And then the weekend came. I was in profit. Then this week started.
So just stay in on Friday, right? So that move that happened during NFP, of course, that was just a fake out. That was just price manipulation at that point, right?
I wouldn't call it manipulation. It was just like algos jump in on the initial miss.
Yeah.
Of course they do. Pumped up the price, got into resistance. People also, because it's a Friday, take profit on a short scalp up, especially because the underlying sentiment, I think, was still down. It was down, this whole structure. So like big players, they will jump on the bad numbers, take a quick profit, and that's how these fake outs, if you want to call it, happens. But in the end, it's not manipulation. It's just how traders trade, right?
Yeah, yeah. Okay. So you wouldn't say that it was actually a case of sellers being taken out and then the move actually happening that was meant to happen.
No, but in a way. But if you look at that candle, I think that's a prime example of what you're trying to say here. So you get the resistance here formed here above 2K on the first test. Then you get the consolidation part, and then especially on this candle, and that gave it away for me. It was a super quick liquidity scalp up there. So it shot up and instantly got heavily declined. Also, if you watch it on the 1 minute when it happens live, if you're long in a market, you kind of feel it when something like that happens. And I instantly saw, oh, this is just a liquidity grab. So market goes beyond some barriers to just grab liquidity, to get people out, grab the liquidity, and then the move comes in. And that's a prime example. But here on the NFP, it was just, oh, bad numbers come in, algos jump on the bad numbers. It's a Friday, people take profit of this short scalp move, and that's how this structure comes up.
Interesting. So let's say on that second touch of that trend line that we have, right? You would count that as a liquidity grab, right?
That's how it folded down, like how it happened. If you watch it on the 5 minute or 1 minute, like how the price, if it would go like slowly, like this 1 or 2 hour candles slowly into that resistance zone, touching the resistance zone, or indecision candle in between, that's not a liquidity grab. A liquidity grab would be, oh, it comes to resistance, it like price gets choppy, like in the 1 minute, you know it, and then it shoots up to the resistance band or maybe above, just to like grab liquidity. Big orders coming in just to grab the liquidity, to grab the stops, and then like re-enter heavy shorts.
Yeah, because I would personally class that second touch, that massive wick, which is on the 1 hour, by the way, right? I would count that as a liquidity grab, right?
Yeah.
Then what you're saying on the third touch, that's not a liquidity grab. That is purely based on NFP obviously coming out, and then people scalping quickly for the buys, the big players, as you said, and then the sentiment was still bearish the whole time.
Yeah, because it didn't post a higher high. Didn't go through the resistance. And if you saw it on live, it wasn't like shoot up, shoot down. It went up on the algos, and then it went slow. It tried to break the resistance, and it tried for at least a half an hour, and then it came down.
So let me ask you during that half an hour, because I know you just said you were watching it very closely, right?
Yeah.
So within that half an hour of everything happening, that's obviously at the point where you got stopped at, well, you got slipped even, right?
Yeah, even on the like instant on the NFP release, not like a minute.
Yeah, no wonder you were mad, right? You'd be like, "Oh, fucking hell, like this is crazy."
Of course.
Okay. And then
Everybody
after
would
that,
be mad.
I mean, look, this is just showing that it doesn't matter, how long you've been in the game. You're still gonna feel what you feel at times, right? Like, I think it's important for people to understand that there's no way of shutting off emotions, and you should actually not shut off emotions. You should just know how to, let's say, maintain those emotions better, being able to understand how to navigate through your trading with how you feel. So you felt mad, but your bias was still correct, and you knew that, no, I'm still going to re-enter shorts.
Yeah, I wanted to see the reaction on the resistance. If it breaks out and puts a higher high, I wouldn't enter. But I watched for at least 30 minutes, 40 minutes, how it reacts to that, and it was so tough. Like, if it shot up like that, I would be more cautious. But it was like fighting on the resistance, and you could see that buyers are slowly giving up, and that's where I re-entered.
Okay, that's interesting. All right, so now let's walk through after that. So so you saw after half an hour the big rejection, let's just call it, and then it carries on downwards, right? Okay, now walk me through from there, like what started happening, and then how you progress through that.
Yeah, so it was a late Friday afternoon, trading after NFP. So I was in a good position here from my first entry. So I had a lot of liquidity left, and on my plan was, if it goes up like 1998, I want to re-enter. That was in my mind, like instantly when I got confirmation that my entry was okay, above 2K. And I just waited until a good pullback is going on, and I got it on very late Friday evening to 1995. I entered, I think, 1994, like almost closely before market close on Friday evening. Yeah, it carried on from there. And we have the same setup as we talked last week. We have the double top, the head and shoulder play.
Yeah.
You can actually see it pretty good on the 4 hour. So this is the left shoulder, this is the right shoulder, this is the head, and you can draw it like that. This is the shoulder, and here was the shoulder break. So I re-entered on the break here. I put up more positions, 2 more positions on the first break, and then on the second touch here, like second retry, I entered more trades, just because this break is a big sell signal. like the head and shoulder at the break of the neckline. This is the usual sell signal for a broader trend change.
Okay.
That's why I doubled down and tripled down on the trade, because it, like, this structure is a pretty good structure. The trade worked perfectly, and then it's just another confirmation of the trade, of the whole setup.
Okay. And when you're, let's say, taking these different entries, multiple entries, what time frame are you firstly looking at for these specific entries? And then if so, which time frames, if not the same, are you looking at for actually executing on those specific trades as well?
So for this, I only use the 1 hour, 4 hour, and daily chart. These are the most like telling for me for intraday or for a weekly positional trade, because you see a lot of things. Like you see the head and shoulder, you see it pretty good on the 4 hour here. You see it on the 1 hour. If we go back to when I saw the trade, like it looked like that. So you see the head forming here, the double top, and left shoulder, right shoulder, and so I like the 1 hour the most, because it's more active during the day, and for everything else like positional play, I like the 4 hour and the daily chart, because you don't get faked out as much. You eliminate the noise between the 5-minute or 15-minute, where you can get like big wicks that in the end don't matter anything. Right? It doesn't matter, because the bigger picture is there.
Okay. So I guess just to clarify, sorry. Right. So just to clarify there, you first saw the head and shoulders forming on the 1 hour time frame. Like that's when it started being telling to you. Then you zoomed out more on the 4 hour and you could see that it's even clearer that a head and shoulders pattern is forming. And then you also use the daily just to give you an even higher bias for your positional trading and your multiple entries that you take.
If we talk about technical, yes, that's my technical approach. But before even that head and shoulder pattern, I put up my bias, right? So I can show you that as well.
Yeah.
So this is my Discord, and I posted on the 23rd of October, so around here. I posted on a Sunday like my weekly bias, and it was all about the run up in gold, and the like how I see it from the Israel-Palestine situation, and compared it to last year's war breakout in Ukraine, which is that. That picture is the last year, February of last year, and that I circled in. This is the first 2 weeks of the Ukraine-Russian war, where you get maximum fear, but when everybody like calm down, and it's not World War III. Yes, it's a war and it's bad, but it's not like the big war. All the fear gets priced out, and usually it takes around 2 to 3 weeks, this first step. And then this is this year on that timing, the first 2 weeks of the Israel-Palestine situation. So a big buildup until the 2K mark. And I said in my analysis on that week, the week after, that I see it more of, oh, maximum fear is already inside, and it usually gets priced out pretty quickly. As quick as it gets in the market, it gets out. And what we saw, and that's what the telling is, like this consolidation part below the 2K, the the situation is ongoing and bad things are happening, but the market was less and less disrupted by these headlines. So when I saw that, I searched for entries, and then the head and shoulder pattern came up, double top. That's my whole point. Like I wanted to search a position like that for like 2 weeks, and then I got it.
Okay. So you actually had this documented in your Discord, really, just forecasting at the end of October what you were looking at and sort of what's happened in the past. So
Yeah.
would you say that looking at past data, or let's just say historical data, in terms of, for example, what happened last year with the Russia-Ukraine stuff, right? And then obviously prior to that, again, with COVID and whatever other sort of events have occurred, that you use those as well as part of telling you that, okay, we're at these specific levels again. We haven't broken any highs. So this is giving me another confirmation, let's call it a confluence, to actually, be more invested in that trade.
That's exactly it. I think trading is super hard, and you need to trade your possibilities, right? And you need to trade percentage wise what gives you more confidence in your trade. And some people trade only technical, some people trade something else. Anything can work, but what I want to do is, and with my experiences, I saw a lot in the market over the years. So I've been to to a lot of things, so I can like when I see this liquidity grab, or when I see the reaction to the NFP, like I saw it 100 times maybe, and I sort of know how to react. It's not always the right play, but it gives me like this small percentage of an edge, and that's how it gets more successful in the end, because it's a lot of experience behind it, and I sort of like combine all that I know from the past. If it's just an event like the war right now, that I have a blueprint from last year maybe, and it turns out it works, so I can use it in the future again. So same is with the currency manipulation from the Japanese right now with the yen, that happened a few weeks ago. I called also in my Discord 2 weeks before, look at 150 on US dollar yen, they will act. And I put up what happens when they act, like the wick down, and it comes up, it gets buyed up pretty quickly, and it came like that because it happened in the past a lot of times. So we have to go through a lot of things to get the experience and know what to do in certain situations. And I think that's the biggest edge that you can't teach. You can't teach someone experience, and that's the main thing, because my trading style, like everybody can see the patterns, the head and shoulder patterns. Everybody can have the 100 200 moving average that I use. Everybody can do and draw the support and resistance line. That's it. I don't use any special indicator, right?
Like it's very simple in terms of the technicals when you look at it, right? So in other words, it's like what you're saying is that anyone could have these things on their chart, but it doesn't mean that they'll be able to execute the same trades, or have the exact entries or long-term bias that you have. And
Yep.
that is due to experience. Like experience can't be bought. The only thing that can lead to experience is time. Without going through the journey, and again, it might take someone 2 years to make any money in trading, but to really refine your skills and even do what you're able to do, because let's be real, I don't know anyone in the industry that's doing what you've just done, right? And again, on a regulated broker, on a real broker, and showing everything live as well, right? So it's just that experience, without experience, you are limited to an extent in your trading. Would you say that's fair to say?
Absolutely. Trading is hard. It's hard to learn. It takes a lot of time. It's not a month game. It's a multi-year long game to get to that stage, and you will never stop learning.
Yeah,
Right now, I
that's
see
one thing.
different things.
Yeah, that's one thing. Like you're 15 years in the game, right? You're a veteran in the game. But one important thing you just said there is you'll never stop learning. So that
Yep.
means in your mind, you're always going to be a student of the markets, of the journey, of learning on the go. And you're 15 years in, you know?
Yep. And like I pick up things over the years. I pick up things now when I see different traders, different setups. And when I like something, yeah, I keep it in my head and maybe I use it in the future. Like this trade, I don't search all the time for head and shoulder patterns, and that's my trading setup, right? But like I have it in my repertoire, you know? So if I see something, I take it. And somebody else maybe don't see the head and shoulder patterns, but maybe a triple touch on the top, right? And there are so much different ways to take it. And even if you don't get the perfect entry, like if you read it right, and even if you say, oh, I search for lower highs and lower lows, this setup would work, right? You maybe entered here or here and it still worked. But yeah, you never stop learning. You keep adding to your toolbox, so to say. And for me, the best thing is like fundamentals. When I added this, it blended out the bad trades for me, or most of the bad trades, because I tried to go to higher time frames and really understand, hey, what's going on, and how is the market structure right now, in a fundamental point of view. So especially with the US dollar, like what's in the price, what has to be priced in, are there any fundamental change? Because maybe a lot of people would take, if they found the same entry that me, maybe they took profits here on 1970 because it's a support zone. But you remember we talked a lot, and I always told you, when you asked me, oh, do I want to take off maybe some profits?
By the way, how many times did I say to you, like, are
Like
you going to secure now? Are you going to secure?
almost on a daily basis, on 200K profit. Yeah, are you going to secure? No. On
And then
500K
500K, and then
especially.
500K, and then 500K, and then 700K.
Yeah, you always ask me, and remember what I told you, like, has anything changed, like on the approach? Has anything changed? No. And I always told you that I'm watching like the big structures on 1950, 1960, how the price reacts. And what it did, yeah, it reacted, and pullbacks happen. But I don't get nervous because, like, did anything change? No. Even though it doubled down after the Powell speech, it's the same structure. And even after the big pullback, what I told you yesterday, remember when you told me again, like, are you gonna secure something? I told you no. It didn't put up a higher high
Yeah.
above the high before on the day, and it put up a lower low than the low before of the day. So this is even more a bearish structure, right?
Yeah.
So
Yeah.
I even
Yeah.
added.
Yeah, you added more entries, but I remember as well you were mentioning specific key levels to me. You said that, look, if okay, 1950 is a very important level, right? If we break that level, we're looking at further downside. But then you also mentioned when we had this pullback yesterday with Powell's speech, right? Whatever you said, you also mentioned that if this does not break 1970, because these are key levels for you, right? When you're looking at the structure and where price is really heading, right? So for that reason, because it didn't actually get close to 1970, you were even more confident that okay, this is just another leg down. It's just a matter of when.
Yes, exactly. Like you need to know what works in the market, what doesn't work, and you need to trade the probabilities, right? So with all the structure and all like how price behaves, putting up lower lows, lower highs, it's even more a telling sign that we are in a down market, right? So you just need to know your stuff in the end. And the only reason I closed today is because it's a Friday afternoon, and we are close to the 200 daily moving average. If it would be a Wednesday, I would still be in the trade.
Yeah.
And because it didn't change anything, and maybe I will re-enter on Monday. Because also like the swaps are also pretty good. I think I earned like 8K swaps on a daily basis on that trade. So yeah.
Let's actually go into your history to see how much you made on those swaps.
So like this trade I put up yesterday, so
Oh my God.
it's 1.9, 9.7, 9.7, 5.8 on the, yeah. These are the closed out trades from, yeah.
Oh my
So
God.
it's around I calculated it, and it's around 8K per day I made on swaps.
Damn, that's
So it's I'm pretty okay with holding a trade, right? Over a week or 2 weeks when you actually earn a lot of in swaps as well.
yeah, that's insane. I mean, yeah, I don't know anyone that's firstly made a trade even to 10% or 20% of this whole amount, let alone having swap fees that they're collecting, which adds up to like, from what I'm seeing, is like 25K plus, right? If you
It's
have
around 30K. Yeah.
okay, 30K, that's, I mean, your swaps are what you put into this fucking account.
Yeah.
That's, oh my God.
And maybe I re-enter next week and earn more swaps, right?
I think now you've secured, right? You're gonna withdraw this, right? You're gonna withdraw this one, right?
Maybe.
Maybe.
I don't know yet. I think because the trade is not done yet. So if it pulls back to resistance and I find gold entry, I think I will re-entry next week until anything changes fundamentally in the trade, or if we go to some levels. Because I think if we go to the daily, like the 50% of a big move, which comes in around 1910, this is a big level. And if you know trend following models, this is usually where the downside stops and the trend picks up again. You can test it. It's one of the best trend following models that I know. But we can do another another video on an actual easiest setup that I ever saw, that I know from a pit trader that traded in London in the 1990s. He uses that model, and it works like a charm.
Okay.
And so that's why I always look at the 50% of a big move, and unless it doesn't break like the 1900, I would be cautious, yeah. But if it goes up, I would re-enter to, because the trade is the same. I just close it because it's a Friday.
Yeah, fair enough. Yeah, you definitely need to drop that source, whether it's privately or another video. As long as you drop that source, that's all I care about, right? And obviously for the people to be able to absorb that information as well. So the question I had, right, was that of course you've walked us through the whole setup from A to B, exactly what you did, why you did it, how you did it, and also the re-entering phase from last week, which is very important, right? Because what most people would have done in that scenario is that once they got stopped out, especially because they made a loss, because technically you made a loss before you re-entered, right? They would be like, I'm out of that trade, I'm finished. No, I'm just going to wait for price to do its thing. But by the time the price has done its thing, you've already missed the entries that you wanted. And then that's where that whole psychology starts to play, where, oh damn, I don't know now if I should re-enter, and then you don't ever enter again, right? Or you might buy, you might change your whole bias. Now you're like, oh shit, what's happening, right? So
or you are too fast on the revenge trade, right?
Yeah.
So you
Yeah.
just get stopped out and you want to get in again. So what I did, I waited till I was almost sure that it doesn't break the resistance, right?
And that was within that 30-40 minute period when you were
Yeah.
watching during NFP, right?
It's risky, but I saw the risk percentage on my side.
Yeah.
Because
Yeah.
it's Friday evening, like how the market reacted in the high zone. So
Yeah. Again, this is not something you can just simply teach by watching or reading. It's something you have to really go through time and time again to identify these things, not just with the patterns, as you mentioned, but also even with re-entering, what you look for to re-enter, right?
yep.
You didn't just straight away jump back into the trade and, you know, go for revenge trading, for example, right? You actually waited. You took another calculated approach, which was effectively your original trade anyway, right?
Exactly.
Okay, okay. Now, another question I had, right, is that with these key levels, so of course, like you said, I was saying to you like every day, like, oh, are you going to secure at this price? Are you going to secure at this amount? And one important thing you said to me, which I'm actually a firm believer in anyway, and I appreciate, right? But of course, this is just crazy, everything you did. So I'm going to ask you all these questions. Was that, you know, you don't look at the numbers. You don't look at the monetary value of your trade. You're more focusing on pure price action. Can you elaborate a bit more on that? Because that is something that you kept telling me, right?
Yeah, exactly. So I usually don't look at the money side. So because it tricks you in the end. So because, for example, on the 1958 thing, when this happened, I think I was close to 500K, right? But it was like 450. And you could be tricked. Oh, I want to hit the 500K. And it would never get to you because it's down there, maybe on 1945. So you get reversed because you waited, right? This 50K. And that's how you get tricked. And I learned it 10 years ago when I actually looked at numbers and I like these key levels, these round numbers, and they trick you. So eliminate that and only look at the charts and trade what is presented to you. Because if there's something in the price action, you have to respect it. Price doesn't respect your money; it does what it does. So doesn't matter if you're on 1999 or $1,000. You have to eliminate that part. Also, the mental game behind like these big numbers. Of course, it's a million, huge number and life-changing number for a lot of people, right? Within a week. So you could be like, also you could be in 200K is also a life-changing number for a lot in a week. But if you are too like mentally attached to that, you would close out the trade here, up there, and would never let it run that long. So what I do is like eliminate that part completely, and I did it a long time ago, and that's why I don't care about the loss, because I was up 250K on the first trading setup, and it got down to 0 again, or -9, and so a lot of people would be smashed, right? But if you
Definitely.
don't look at that, you don't really care. You just go next, and
Yeah, I think that's really really interesting because I know a few other traders that now try not to look at the value of profit they're running in, right? They start to look at a point system on TradingView, and it's helped them scale massively, you
yeah,
know, massively.
yeah,
So just on that part where you mentioned about, you know, price tricks you, the markets like to trick you, right? So would you say that whole tricking aspect comes into play when you are actually looking at the money? So as soon as you eliminate the money aspect in your head, you focus strictly on technicals, on the fundamentals that you've been able to learn over, you know,
Absolutely.
the years. And then in turn, that is what creates your edge, because I believe everybody's edge is unique. Nobody's edge is ever going to be the same, no matter how much they want to say it is.
Absolutely, absolutely. Like the mental game is the toughest game in the trading thing, because if there would be this perfect technical stuff, like in the days of AI and computer software, whatever, somebody would have, or a system would have find the perfect style, right? Or the perfect trading setup. And that's not out there. So what does it mean? It doesn't exist. A lot of things can work, but what makes you good is if you have a solid setup, but your mindset is perfect. So you have to clear your mind. You have to know what you're doing. You have to be detached from money. Like eliminate all these bad habits, because they make you lose money. Not the system. Sometimes the system, but like most of the times, you as a person make you lose money, because you find different people trading the same system but have completely different outcome, because they see the market different. They have a different risk tolerance, all the kind of stuff, and it's all the mental game. That's the most important thing in trading. And like one of the easiest thing is to just eliminate this whole tab below where you see the money, and then you go on and just make rational decisions on your trade, not because of money, because of what you actually see.
Yeah, no, I love that. I love the fact that you've, you know, emphasized on the mindset part, because ultimately, as you said, you can have whatever system you want, or, you know, analysis, technicals, whatever it may be. But it ultimately comes down to having a clear mind to be able to really understand not just what you're doing, but also how you're doing it, the approach to actually executing. Because, you know, you can have three traders, as you just mentioned, that could trade the exact same way in terms of technicals, fundamentals, whatever else there is, but that edge is what sets every single person apart. So that's what sets the losers from the winners. And of course, it's all relative. You know, someone could, like you said, someone would have made 200K and it's life-changing money. Of course it is, right? But you just made 1.25 million, which is absurd. So it's like, and you were able to do that because not just of the experience that you have in the game and the mental edge that you have, but it's also because you don't look at the money. You look at what is price telling you. And you've only been able to really, you know, shape this sort of way of trading through the 10, 15 years of trading. So anybody watching this and thinking like, oh, well, if Pasquale can do it, I can do it in 1 year or 2 years. Whilst that's very ambitious and, you know, I want to motivate you as much as possible, you need to be realistic with your trading and how much time and effort you're willing to put into this craft, right? Because it's not going to come overnight. It's not going to come months later. It might not even come years later. It might take 5+ years. But what it comes down to is how bad do you want it? And where are you willing to go in order to reach those heights?
Yes. Yeah. Because a lot of people trying to do or take the shortcut, and they think, oh, if I buy this course or if I look at this trader, I learn everything in a week and I'm a professional trader after that. And that's just not the case. It takes a lot of time. Even learning an easy system, like it takes 6 months, a year, or however long it takes, but it takes time because there are so many things to it. And it's just yeah, you have to put in a lot of work, And it doesn't take 10 years. Like I'm trading 15 years, but if I would start right now, with all the information that it's out right now, you come in with the right mindset, and you can learn mindset by listening to good traders, what they do, especially on that part. Then you can like accelerate your learning process, because you look at the right stuff from the beginning, so you know what to focus on, and not just like trying things. And but if you know, oh, I need to eliminate these bad habits, like you can start learning by that. You can start eliminate that habits, or eliminate that bad mindset from the beginning, if you know what it takes. And I think if you look at a lot of good traders, almost all tell you the same thing, like risk wise, money wise, don't look at that, don't like try to overtrade, like stick to one system and try to refine it over time, over month, over year. And that's the way.
Yeah, no, I love that. I love that. And one thing, just to touch upon what you mentioned, is that obviously you started 15 years ago. So we know technology has advanced so much now, right? And we're in different times. The accessibility to information is never been better than before, as it is now. So when you started your journey, and back then, would you say it was a lot harder starting back then in comparison to if there was to be, let's say, a new Pasquale, let's say you never traded and you started now? If you were to make that differentiation and try to compare of you starting when you did, and let's say if you had started now, how much harder or how much easier it would be now?
I think it can be both, because back then there were not as much information as you said, and it was harder in a way that you have to put in a lot of work by yourself. You have to put in a lot of research by yourself, and just doing all this stuff. And but the other way, it's also a blessing, because by that you learn a lot, and you don't just look at someone else how he does it, and then if you're not satisfied, because I see it a lot with beginner traders. They look at some mentors and try it for a week or 2 weeks or 4 weeks, and if it doesn't work for them, like they jump on the next train and jump on the next train. So right now there's almost too much information out there, too much mentors. But as I said, if you have the right mindset, and if you like focus on the real things right now, with all the information that's out there, and it's almost all free out there. So if you know what you have to search for, definitely it's a better time right now. But you have to come with the right mindset. That's key.
Yeah, I think for me, I share a similar sentiment in terms of, I never, first of all, when I got into the industry, I never trusted anyone. I'm not saying I trust anyone now, right? But in terms of all these mentors and gurus that you just spoke about, for me, it was like, okay, obviously I need to learn something. I need to learn something that works for me. So in my mind, I was like, I'm just going to do trial and error until something makes sense to me and something works and I put things together. Right. And I feel like by doing that, it's been way more valuable for me long term than me, strategy hopping, which everybody does in the beginning, by the way. That's fine. Like it's normal to strategy hop. But as you mentioned, like mentor hopping, because they might spend a month with someone, they're like, oh, I'm not getting the results that I want, or it's not working. Then they jump to someone else who trades completely different, which then obviously leads to even more confusion. And when you're new in this game, you're like I like to imagine it in terms of art, like you're a blank canvas, right? So once you go to the first mentor, you're starting to paint that picture, right? But then if you stop painting that picture, and then you start painting a different picture on that same canvas, and then again repeating like a iterated loop, then you're already harming yourself before you've actually learned anything, right?
Yeah.
So it's very important that you focus on one system that works for you. And again, you won't get that from the very beginning. That's the whole point of the journey and really discovering what works for you. Because again, what works for you might not work for someone else, and it might not work for me, but it works for you, right? So ultimately, it's what's happening inside. What are you thinking? What are you feeling? How are you seeing things? Because that's what it ultimately comes down to. What are you seeing on the charts? But then also, the fundamental knowledge that you mentioned, that as soon as you started incorporating fundamentals into your trading, because the technicals is one thing, but as soon as you started incorporating the fundamentals, it changed your trading completely.
Absolutely. Absolutely. You have to find like what's for you, what fits you, what fits your personality. And because only then you will put up the hours and days and weeks and month that it takes, because you like it fits you. And you can find that in a week, or you can find it in 2 years. It doesn't matter in the end, but you have to find that. And you will never find a holy grail system that's just easy to use, like put it up and it brings you returns. It
Yeah.
doesn't exist.
Yeah, let's make that clear, right? The holy grail that people like to call it, the holy grail, does not fucking exist. Like, it's not a real thing. There's a reason why even you're saying after 15 years in the game that you're always learning. You're always going to learn something new. You're always going to be a student of the game. Of course, if there was a holy grail, don't you think the fucking banks and all these funds will be trading like 4,000% a day, like you just done
It
in a week?
it would be known. It would be known by now. These markets are so old. Like, and we have all the techniques, the software, like everything. It would be known by now, and it doesn't exist. So everybody should stop searching for the perfect setup, like easy to use setup. There are easy to use setups, but like you have to execute it in the end, and that's only on you. What you
It's
do with it.
it's all on you. Like, it's not nobody else's fault. It's not the market's fault. It's not someone that you're talking to about trading's fault or trying to learn from. Ultimately, whatever you do when you click that button, or whatever, tap that button, whatever you want to call it, is on you, right? You're responsible for the trades you take. Just like the same way in life, whatever actions you take in life and how you carry yourself is all on you. There's nobody else holding
Yeah.
your hand. There's nobody else, being there to take the blame. It's ultimately only on you. So
Yeah.
it's that saying,
And
right? You versus you, and that's it.
yeah, and to close the circle here, the most difficult part is not open the trade, but when you close the trade. So
Yeah.
even you close your trades too early and let your losers run, or like the approach that we brought up before is detach from the money and just trade what you see and what the market gives you, and the money will come afterwards. But that's the hardest part, when to close a trade. And you see a perfect example. Like I could close hundreds of $1,000 on the pathway, but I only closed it because of the day and structure of the price right now. But otherwise I would let it run because it's still valid, right?
Yeah. Yeah. Like, your setup still hasn't changed. It still hasn't changed, but eventually you got to a point where you were happy with what you've seen in that whole trade since last week, and you were satisfied to take the profits. Because I think one thing that we should emphasize on is that also taking profits is important, but like you said, you don't want to take it too early, because then you start re-entering and then you have those losers running, and then you might end up losing all of the money that you even made, right?
I mean, it has to make sense. I take profits sometimes within minutes, but because the setup is like that. But this setup is a multi-week setup, maybe. So I have to treat it like that, and not just like, oh, the entry is a multi-week setup, but I treat it like a scalp that I want to close in an hour, right?
Yeah.
So until like the fundamental setup of my trade doesn't change, I won't change the trade.
Yeah. Okay. And just on that fundamental piece, right? Like, how many years into your journey did you firstly start to really incorporate fundamentals into your trading? But then also, how did you, let's say, get the fundamental knowledge that you needed, and also how to apply that into the markets? Like, how did that happen? Was it a gradual transition, or walk me through
Well,
that?
I think I started to look at fundamentals pretty early. It must be within the first year or two, when I first got stopped out on an event, when I thought, oh, what the fuck is that?
Yeah.
And like, I was always interested in such stuff, so it was easy to me or for me to just look into that. So super early, but also in fundamentals, you never stop learning, because you always have to adapt to the current situation, and you always have to make up your mind, oh, what's going on. So you constantly thinking about the situation, and like the puzzle, the pieces to the puzzle that comes together. And so you always have to adapt, and you keep adding new stuff that you never heard before. But you watch Bloomberg, and some crazy economist talks about something, and you pick it up because it makes sense for you, and now you remember it for the future. And talking about Bloomberg, if you want to start with easy, understandable fundamentals, go and watch Mark Cutmore. He's one of the Bloomberg guys, often early in the morning. So 1 hour before UK opening, he does a lot of pieces, and he has it right, and also within 3 minutes usually. And this is a great start to look at the broader market picture within a short period of time. Mark Cutmore, he's crazy good.
Okay, we'll definitely put that in the as a link in below the video as well, just for people to start looking into. That's great. That's great. And look, I guess this has been this has been crazy. Just the last week as well. You'd expect someone to be doing this over God knows how many years, and compounding their account and taking it, very slow with everything. But here we are, literally a week later. Pasquale has turned 30,000 euros into 1.25 million. That is insane. Like, I don't even know what to say. So for me, I'm just excited for the people to see this. Also, your whole breakdown of this setup, the mindset gems that you constantly drop everywhere, and also, what they can take away from this to really help their journey, whether they're just starting, whether they're a few years in, or whether they're a seasoned veteran in the game. There's always room to learn, as you mentioned already. So I really enjoyed this time. Appreciate your time as always. All the knowledge you give. And I guess any closing words before we end this session?
We said pretty much on everything trading related. So I'm excited to give more information for you guys, and just look at the discords of Umzi and me. A lot of knowledge is there. I keep posting stuff. We have a good project coming up where we give actual value for all the traders. We provide informations, everything that you need to succeed in this business.
Yeah, just to add on that as well, real value, something coming soon. So stay tuned for that, guys. And I can't wait until you can see what we have cooking. But other than that, appreciate you, Pasquale, as always. And thank you for this session.
Hey, always a pleasure.